Hello and welcome to today's episode of the Hospitable Hosts podcast. Today we are speaking to Key Data and we're going to get some information from them on the short-term rental market and specifically how Q1 2025 performed for US and Canadian markets, and then also how things are looking at the start of Q2 so far and into the rest of the year. As always, if you enjoyed today's episode, please don't forget to like and share. Okay, let's get started. Awesome. So let's get started. Hey, Daniel, thank you so much for joining us.
Hey, Miles, how are you?
I'm good, thank you. I'm doing good. How are you doing?
I'm very happy to be here. It's the sun is finally coming out in Colorado, which is where I live, and it's making all the news that's happening today a lot more palatable. Just when it's a sunny day outside, and you can go take a deep breath and just realize that the world is not ending. It's kind of the feeling I get today.
Love it. That sounds good. So I guess for our listeners, we should caveat that today's episode is being filmed, recorded on April 9th. I think we're releasing on April 15th, but April 9th is our recording date. So all the comments coming from Daniel are based on, I guess, the situation today in the market. Things are changing rapidly at the moment. So hopefully it's not too outdated information when you're listening to this, but just kind of a little caveat there to everything that we're talking about, I guess.
Yeah, absolutely.
Sweet. So, Daniel, let's get straight into it, I guess. I think for starters, we did want to kind of talk about how the short-term rental market performed overall in Q1, if there's any kind of standout markets or regions, and obviously we're probably already going to start talking about how that might change into Q2 as well.
Sounds great. Where do we want to start?
Cool. Yeah. So I mean, that's the thing, right? So like Q1. Do we have a good Q1 in the US? Across the board, right? Overall, do we see kind of positive results in terms of kind of the amount of bookings coming through and the ADR, I guess, that people were seeing?
Yeah, I think that's a big question. So let's talk about it a little bit with the Q1 diversity, I guess we can say. There's been a ton of Q1 really showed a lot of mixed occupancy performance, and that really changed a lot of how this conversation can go. But it really matters where you're at. Right. There's I hate generalities because especially when you talk about nationwide performance, you have, some areas that, especially when we're talking about Q1, you get ski areas. Some of them have good snow. Some of them don't. You have some areas that are recovering from disasters, like speaking about Western North Carolina, for example, when we talk about the U.S. market. There's certainly some massive differences that are happening across the country or our countries, or I guess we should say the continent, because the other thing that's been a topic for the last 3 months has been, what are the tariffs going to do in Q1? We already started to see a decline in visitors. We released a piece last month that talked about the number of Canadian travelers that weren't coming to the U.S. this year. Yeah. That's going to be a huge impact on places like Palm Springs. But I will speak in generalities for a second here, just to give you what you're looking for, is really that Q1 showed that mixed occupancy, but the Southwest U.S. really saw strong occupancy in Q1. Some central and mountain regions kind of remained pretty much stable, like even with last year. And then you go on to the East Coast, and you have a lot of places that are way ahead of where they were last year, 10% ahead in Q1, certainly pacing for the year ahead of where they were last year. And that was really positive to see through the first quarter of this year, up until the calendar changed in April. Really saw a lot of strong markets actually across the U.S., but with a lot of the inventory in the U.S. coming in Florida, definitely down a little bit there. So it depended on where you were. There were a lot of markets that were up, though, in the United States. And then if you go into Canada, you definitely have generally lower occupancy rates across pretty much all the markets compared to 2024. But some markets maintained pretty strong performance despite the dip, because they increased rates during that time period.
Nice. Okay. Interesting. And then obviously, pre-recording, we kind of already chatted about this, but Q1 is kind of done and dusted. Q2's probably going to be a little bit different. What are you guys seeing already from the first few days of post tariff, or not post tariff, tariff life? I guess we're here,
Right.
we're living in it. Yeah.
Yeah, I mean,
What
the
impacts
big
are you
thing that we
seeing?
saw was just to get it right off the bat was the recent data point on April 5th.
Mm.
Reservations per property decreased by 20% year over year. It's an
Wow. Okay,
average, but
that's a
that's
big
like
number.
that was like a oh shoot moment for all of us, and definitely some expletives came out when we kind of recognized that happening. Um, it's become more and more real, and we're seeing that kind of shift every single day just get deeper and deeper and deeper. For anybody who's watching the stock market over the last week, as of April 9th, yesterday we had a 1,400 point increase in the stock market, in the Dow Jones Industrial Average, on at like 10 o'clock in the morning, 11 o'clock in the morning, and by the end of the day we were down 400 points. These are the types of swings that are making consumers just unsure about what's going to happen and not allowing them to book. So definitely seeing a massive reservations per property decrease right away as a result of all these tariffs. Definitely the fallout of the tariffs, right? Is it really the
Yeah.
tariff, or is it the result of everybody panicking about the tariff? I think that's what's really happening. Personally, I think that a lot of those bookings will just come shorter into the stay. The one thing I've noticed, I've been in the industry since 2011, so I've seen a lot of this stuff play out. The
Yeah.
one thing about North American life, if you will, is you can't take away my vacation, and so I think a lot of these impacts will be seen more from international markets,
Yeah.
whereas the local markets will be a lot more sustainable through this, because people will just not go on vacation outside of the U.S., or they won't go, or won't go as far. And so, making sure that you have those drive markets really dialed in with your marketing strategy is going to be extremely important.
That makes sense. And then I guess the all of this recording is going to be broad strokes in a sense of looking at Q1 versus the first few days of Q2, but the some of the dips and the peaks that we've seen in Q1 versus I guess the so far 20% drop we've seen in that one data point in Q2. How is that affecting average daily rate as well? And how could that affect pricing strategy for a host? Do they need to be look at discounting essentially in order to just make sure that they're getting the occupancy in a market that clearly we're seeing a big dip in bookings?
Yeah, and again, we're seeing massive trend differences in all the different markets. So when I say
Of
this, kind
course,
of take that as
yeah,
a grain of salt. But yeah, the fluctuating ADRs, Western U.S. and markets have really seen steadier increased average daily rates. I've also seen that a lot on the East Coast, where pretty much everybody's way up in ADR. There's a
yeah,
lot of markets that are down in occupancy, but up in average daily rate. That's probably the most common thing that we've seen across the
yes,
US, into Canada as well, where you're seeing rates outpace occupancy. And honestly, it's covering the increased rate had been through Q1 pacing for the year, right? Because we do have the forward looking data. So I'm not
yeah,
just talking about Q1, just as of Q1, looking forward for the rest of the year, we saw rates that were higher and that covered the lost occupancy when we looked at pacing. So having those higher rates has generated, historically this year, has been able to cover the lost occupancy. But if those bookings continue downward, it's not going to be able to maintain. Like, for example, I was looking in North Carolina yesterday, and we had, as of a month ago, they were up by 13% in whatever market it was. I think it was the Outer Banks, was up 13% year over year in RevPAR, revenue per available rental
mm,
night. As of yesterday, it was dead even with last year. That's a
interesting,
huge swing in a month's time on RevPAR,
yeah,
which combines ADR and occupancy. So going back to the ADR, question, we're definitely seeing those higher ADRs across the country, but that's in conjunction with lower occupancy. Certainly across Canada, like for example, Whistler has a very high average daily rate. It's about $647. That's more than double most other markets in Canada, and it's a pretty substantial increase year over year. Like Whistler's ADR rose by almost $200 this year.
Oh, okay.
As that's for Q1.
Yeah, yeah.
So certainly showing some pricing power despite that lower occupancy.
Yeah, it's crazy. Okay, interesting. And how about length of stay? Are we seeing any kind of big changes there for Q1?
Yeah, so we're definitely seeing shorter stays pretty much across the board.
Okay.
Easiest way to save a little money on your vacation is to take a day off, right?
Yeah, for sure.
Take an extra day to get there. I don't know, stay in a cheap hotel on your way there. I know my family just did that for spring break. We were on our way to Scottsdale.
Okay.
We got a hotel for one night and then continued on the rest of the way, made the drive a little easier and saved us
Yeah.
about $1,000 on the vacation.
Oh, yeah, that makes sense. Interesting. Yeah, and then potentially, if folks are doing, driving destinations as well, it's more of a you're selling to a domestic market, then people are more likely to do potentially short length stay, right? I know that if I was flying from the UK, where I'm originally from, coming across to North America, I'm going to do quite a decent length of stay because the flight's so long, right? I want to make sure I make use of my time here. But if I'm driving to a destination, I can do that in a weekend, right? Or even just like 1 or 2 nights, right?
Yeah, exactly. And we're seeing a lot of that. We're definitely seeing feeder markets shift a little bit as far as being a little bit more drive heavy. That's at the very beginning stages. I think I know that I expected that this year from the beginning, but this is just going to amplify that, I think, a lot. I don't think I'm speaking out of turn, but that is my view. That's not necessarily backed by everybody at Key Data, but we all have different opinions about what's going to happen. But the data is definitely showing a little bit of a shift there.
Yeah, fair enough. Definitely an idea for another podcast episode of you guys is the debate across the team.
Let's come back in a month or two and see what actually happens.
Yeah, we'll hold you to your data points. Don't worry. So I'd love to also understand if you've kind of seen any shifts in the past quarter recently in booking channel. So are we seeing direct booking grow or Airbnb grow or anything like that? We'll love to understand that.
Yeah, definitely seeing some changes in the platforms that people are getting their bookings from. Airbnb and VRBO are definitely still the juggernauts in the industry. There's certainly a large amount of the largest growth as a percentage is Booking.com, but they're still very low on the totem pole when it comes to how many bookings they're actually getting. The biggest thing that we're seeing is that the people are commissioned out. I mean, if you're giving away 1% of your reservations to anybody, you're overpaying for something, right? And so we're definitely seeing more and more people focus on direct bookings, and we are seeing a lift in that direct booking number. It's definitely the fastest growing category. It's just not an OTA, so it doesn't get that much attention because when people ask the question, they're usually saying, are we seeing more Airbnb or seeing more VRBO? Right now, what I'm saying is definitely a trend in the direct bookings.
Nice. Okay. Interesting. Yeah, and that's something that I guess we're hearing at conferences as well, and a lot more interest in direct generally with our direct offering, and people want to kind of understand more and how to get started on that.
Yeah.
I'd love to understand, and again, this is just kind of I guess your point of view, your perspective, as well as kind of having self managers, people that own and manage their own property using Hospitable and listening to this podcast. We also do have a lot of property managers as well. How do you think property managers can speak to their owners about some of the changes that are going on in the market, right? And kind of prepare them for some things that are coming ahead potentially, right? And potentially some scary news headlines about like a dip in US travel, for instance. Any thoughts on that? I would love to get your perspective.
We've got a lot of thoughts on this. Can we go a little over
Great.
on our out?
We'll go. We have an extra half an hour.
Right, give me about 3 hours to answer this question. No, it's going to be it's so important to be really transparent with your owners in this situation and let them know ahead of time. Yeah. Some people are not clued in. Usually, if they have a vacation rental, they are clued into the market. But let's say that they're not. Like, you have to be the person that can tell them, look, the market is down 20%. we're only down 5%, like showing them that, hey, we're not down as far as the rest of the market is. So we are doing a good job for you. I understand the market's down, but I can't control, like you can only control what you can control. And the biggest thing that's going to be happening to people who manage properties for someone else is that they're going to get approached by every single property manager in the space because everybody knows that the rest of the market is down. So if those property management companies come to your owners and they say, hey, I know that you're down 20% this year, just on an average, because of that bookings, right, that I was talking about earlier.
Yeah.
That owner is going to listen to them and say, hey, they're only down 5%. They're only down 10%. Right. And so you have to be out in front of that and like really show how you're performing for them or what you're doing and say, here's some things that we're doing that hopefully nobody else is doing in the market. This is our plan for how we're going to approach this. But they definitely need to tell owners, prepare for a rocky time if there's a continued downtrend. We're going to keep you updated on whether or not this turns around, but we've got these tools to help us, and Key Data is certainly one of those tools that we hope you use to communicate with owners. There's a lot of owner report opportunities inside of Key Data, both custom ones, and then we've got a canned one that you can use. It really makes it a lot easier to show how you're performing against the market and how you're performing against previous years so that they can kind of take some solace in how you're approaching this trying time.
Okay, interesting. And you obviously kind of mentioned some of the data points there, and we kind of discussed some of them just throughout the podcast. But what would you say are kind of the key data points that hosts should be looking at when they're assessing like how things are going with them, right? Like, because again, you can't just listen to the general kind of how the market's doing. You need to look at your business. What are some, I guess, of the health metrics that they should be looking at to understand how they're doing in their business? Say they did have a key data account. What are the kind of things they should be putting into their dashboard?
One of the things that I wouldn't even question about is looking at average length of stay and comparing your length of stay versus the market, just to make sure that you're not being too restrictive on your minimum night stays. Okay. The other thing we always talk about ADR, occupancy, RevPAR, but what a lot of people don't get into, because you have to really think about it from a marketing mind, is start to think about your booking windows. Right? Start to think about how many bookings when do you get those larger bookings or longer stay bookings? And then what is the market doing? So having the ability to look at both you and the market for those really specific metrics is really important. There's an enhanced benchmarking tool in Key Data that helps you do all of those things. It makes you a lot more powerful on your strategy about how you move forward, and gives you those answers to, am I in line with the rest of the market? Am I not performing as well as the rest of the market for these very specific things? The other primary thing that I would be looking at is how many bookings I got this year as of today versus last year as of today, meaning on this day last year, we made 10 bookings on last year's Tuesday of April 8th, whatever it was. I can't remember if it's April 8th or 9th, but like to be able to say, hey, last year on that date, we got a lot and this year we didn't get any. I'm doing something wrong, or I'm not. I need to prepare. I need to start communicating. I need to do something to get those bookings in tomorrow. I need to get those. You need to at least be in line with where you were last year, or at least on trend, right? And to be able to make sure that you're following the same trends as the rest of the market is where that magic happens within Key Data, about being able to understand what you're not doing. Because if you see that you're behind the market, you know that you're not doing something that the market is.
Yeah, definitely. Okay. And so besides the obvious that we've kind of already talked about, tariffs, is there any, do you see any kind of market shifts and potential headwinds coming up this year for hosts that they need to be kind of thinking about and planning ahead for?
Yeah, I definitely think that the tariffs are going to rule the roost. And I know you said aside from the tariffs, but I will still focus on that, because I think it's really important to think about where your guests are coming from, right? So those drive markets in Key Data is a standard feature is the feeder market tool. Understanding where your feeder markets are is really, really important. By the way, if you're not having the guests sign a contract when they stay with you that includes their feeder market information, so because a lot of times like Airbnb owns that reservations, they don't provide that to your property management system. Having that be part of your standard practice is to have them sign a stay agreement that includes their feeder markets can be game changing when you're trying to figure out where to market to, especially in these times. So that's a big thing that everybody should be doing when they get their guest information is make sure you get that into your property management system so that it can go into the feeder market report and you can then use that to market. The other things that I would be really focused on is, and this was before any of the tariff conversation happened, was understanding what the average length of stay is that your minimum night stays, and making sure that you do something creative to get those extra nights in. Consumers would always love. There's a reason why when you go to the store, there's an end cap that says special. Whether it's that special or not, maybe you take off 50 cents of the reservation. I'm not saying take 50 cents off of your reservation, but like, man, if you can say, hey, buy 6 nights, get the 7th night free. My favorite episode of Home Improvement was, Tim Taylor goes into the store and there's a special on pliers that's buy 12, get the 13th free. Like nobody needs that many, right? At the end of the day, people gravitate to these things when they see that bright, shiny object, they want to buy it. I think that's going to be more important now than ever. We see it every time there's a down economy. Anytime you can provide a special for somebody, that's good. If I was a property manager, I would never have a reservation that didn't have a special on it, just because that's what is going to get people through the door to get them booked on your properties.
Nice. Good strong tip. I like it. So I think final easy softball question for you, Daniel. If people want to find out more about Key Data and get signed up to get kind of access to all that information, where do they go?
Reach out to us at sales@keydatadashboard.com. We always love to hear from people about how they're performing outside of Key Data and understand more about what you're really looking for. I mean, there's tools in Key Data that help with every aspect of your business. It's not just about knowing what the market's doing. It's about being able to provide a rental projection for your properties, or understand or do that owner communication, which isn't necessarily about the market. It's about what you're doing. So there's a lot of internal tools that help you just run your business a little cleaner, a little more efficiently, and make decisions a little faster. And that's the real value. So yeah, sales@keydatadashboard.com. We'd love to help anybody out.
Perfect. Awesome. Well, I think that's going to wrap us up there nicely. So thank you very much, Daniel, for taking the time to come and speak to us.
Thank you very much, Miles. Have a great day.
Cheers. Bye.
Bye.
Thank you so much for listening to today's episode. If you enjoyed today's Hospitable Hosts podcast episode, please don't forget to like and share on your favorite podcast platform. Thanks again.